Hey everybody, Alan Brochstein here to discuss cannabis stocks. Each week I'm trying to bring a little bit of context to some of the stories that we publish at New Cannabis Ventures. What I'm going to discuss is the newsletter that will be published tomorrow. I'm filming this on Saturday, but on Sunday, September 26th, I believe, we'll publish our newsletter. We've been publishing this newsletter for literally 6 years now. And really the idea behind the newsletter is to help, whether it's investors, operators, regulators, goods and service providers, or even academics, keep their pulse on the finger of the industry. And each week we share the headlines. It's just links to the articles of what we thought were the most important articles. But we also lead off each week with a discussion. And I'll start there this week, actually, but before I get there, I do like to talk about the market a little bit. As you're probably aware, I run 420 Investor, very focused on the publicly traded stocks. And, these stocks have been in decline for quite some time. A few weeks ago, the number of when is this going to stop requests that I was hearing was almost uncountable. It seems to have quieted down a little bit, but that was perhaps a sign that we reached the maximum point of pain. I don't know. But the market's been in decline since it went into a parabolic spike in February. This week was really interesting. Monday morning, the overall stock market was getting hammered on the Evergrande news. And the cannabis index that day declined 6% and was down year to date. So I won't really call it a complete round trip because the rally started, depending on how you look at it, either at the very bottom last March, March of 2020, or certainly there was a correction from mid-August into late September last year before just a fantastic fourth quarter. So I don't really view it as a round trip, but certainly for those who pay attention to the calendar, it was a complete round trip with the index. New Cannabis Ventures Global Cannabis Stock Index literally down year to date. We ended up clawing our way back 4 straight days. It didn't really feel like it on Friday, but the index did rally all 4 days. And it ended the week down slightly, but it's still up almost 6% year to date. So that was kind of the market action from a high level. And this will get into the topic of discussion. We don't write about the market a lot at New Cannabis Ventures in this weekly newsletter, but this week's topic kind of is about the market. And during the week, I found myself hyper focused on the ETF MSOS. And that was the topic of discussion for this week's newsletter. And the reason for that was really a couple of them. Number one, it showed a divergence. So I told you that the Global Cannabis Stock Index moved to a 2021 low this past week before rallying a little bit. But interestingly, MSOS, the ETF, and also the American Cannabis Operators Index, and those two tend to track each other fairly well, they held their closing lows from the prior week. So a little bit of a divergence. This part of the market has been under a lot of pressure. And so there's a little bit of a divergence. In the newsletter, I shared the weekly chart, something I've been talking about all week of MSOS, and it bounced off of what I thought was an extremely important level that had to hold, the 76% retracement, Fibonacci retracement. And it not only did that, bouncing at a must-hold level, but this was the second week in a row of expanded and very high volume for that ETF. So, look, I don't care as much about the ETF as I do about the stocks themselves, but some of those comments could be applied to the stocks as well. Some really nice rebounds from critical levels. So that's what was going on in the market this week, and kind of important enough that I took the time to talk about the MSOS ETF in the discussion ahead of the news links this week. So again, we publish 2 types of news: proprietary content and curated press releases. And those curated press releases were very selective, but they tend to be about 3 things: capital raises, financial reporting, and M&A. And we had one example from each this week. So it was a pretty quiet week. On the M&A front, we saw Cresco Labs do what we've seen others do, expand in Pennsylvania with some M&A. They're buying 3 dispensaries. They didn't give any financial terms at all. They didn't even, it's for $90 million in cash and stock, but they didn't detail what the ratio is there. So they didn't provide a lot of color, but it was very consistent with what the company's been talking about. While they don't view themselves primarily as a retailer, in markets that are underserved, they step up and do retail. So that was the first piece of news. I don't know if alphabetically, it was the first one that crossed my mind. The second one was on capital raising, and in this case, it was a private company, Skymint, out of Michigan, that raised, I think it was $78 million, and they completed a merger with a company where one of the investors, I believe, maybe they controlled it, was Merida Capital. And so I mentioned this because, or we ran it because A, that's a big capital raise, $78 million. But B, Michigan continues. I've been doing this is now the 4th video, and I feel like I talk about Michigan every week. Again, Michigan is like California, obviously smaller, but similar circumstances. There was a very strong legacy medical market that was put into upheaval as they introduced medical and adult use right on top of each other, basically. So a nice legacy market that has been struggling in the early days. Obviously, it's a little bit later than California. I think doing better than California, honestly, in terms of the legal operators coming online. But so there you have a big private company in that market now, before and following the merger that was mentioned in that press release. And then finally, MedMen reported revenue, not very impressive to me. I mean, it grew 55% year over year, they or something like that. They brought back in Arizona and it's apples to apples, but they did bring it back in. So if you looked at what they reported previously, it's a little bit different, but they've decided that Arizona's continuing operations now. And so if you think about it, most of the revenue comes from California, and we're talking about the June quarter, and that was terrible a year ago. And so to grow 55% a year later, that's pretty bad actually, but I don't want to get too much into that. So those were the 3 curated press releases that we included in our newsletter. And then the other type of content we run is exclusive or proprietary content. And again, I've kind of described this in the past. We write about our resources, the index, the revenue tracker, and we also publish interviews. And then finally, I'll do some market data updates. And so we did have a market data update. It was on Canada, and the Canadian retail sales for July were released on Thursday morning. They showed it was the slowest growth ever year over year at 46%. And I have to say, these numbers have been a little bit disappointing this year. It's still good growth, but I think that nation's kind of struggled with COVID a little bit more than the United States. And there's some other issues as well. One of the things that I thought was really interesting about the report was we're starting to see British Columbia show some really strong growth. And that's the #1 per capita consumption province maybe in the world. They like their cannabis in BC. It's been slow to be addressed by the legal market. It's been tough, but there's definitely some inroads being made. And it appears in British Columbia, more legal stores are open, and it seems like the illicit market there, they've been so critical of the LPs, but it seems like maybe they're becoming a little bit more receptive. So not terrible numbers, and they were pretty much in line with what was expected, and it was a record, but 46% growth, it's a little bit less than people had been projecting previously, but it's in line with the expectations now. And then, of course, we ran 2 interviews like we almost always do. And the 2 interviews were both private companies. One was a cannabis accessories company. And, really interesting to see how these small companies start to scale up. And in this case, this company, Session Goods, was able to kind of take advantage of the shift away from uh, stores to e-commerce very well. And I thought it was interesting. They've raised money from some very interesting investors, and it was a good interview. And I think there's an underlying topic here. There's a lot of room for innovation in our space. This company seems to be innovative in their equipment that they're manufacturing. Maybe a topic of future discussion. We didn't include the the Curaleaf Select Click news this week. That's not really the kind of news we run. But on that topic of innovation, it's good to see these companies trying to create innovative products. And then the other interview, I'm kind of blanking, to be honest. I'm going to have to take a peek. Our other interview was, yes. So it was with Cann, and one of the co-founders there. Cann is based in California. That's where most of their business is, and you may have heard of it because GTI took an undisclosed stake in the company. And wow, you would think Ben Kovler owns that company the way he talks about it. He loves it. He obviously owns it a little bit, but he's a huge cheerleader for the company, big fan, bringing them into Illinois, and they hope to bring it into more markets. I have been kind of negative on beverages. I may have talked about this last week or the week before, but beverages, they're tough. And this was discussed in the interview, some of the supply chain challenges. I think the challenges go beyond that. I think that until you have the ability to enjoy a cannabis beverage in a restaurant, pick it up at the grocery store, enjoy it in a bar, it's probably not going to be the huge alcohol replacement that some would hope. But Cann built themselves as an alcohol replacement company. They have 3 lines of products, but their main line is 2 milligrams of THC per can, and they have one that's a little bit more powerful as well. But wow, I can remember in the olden days, these beverages, they were terrible. They had 100 milligrams in them. Not very practical for most people, but very practical for some, right? And so we've definitely seen, speaking of innovation, some great innovation there. We know a lot of companies like Hexo and Canopy Growth that have been working on this, and there's Air bought Levia, for example, or that hasn't closed, but they've announced that pending acquisition. So it's a pretty good interview talking about that topic and some of the challenges of scaling up in the beverage industry. And so hopefully, I wish them well. I wish all these beverage makers well. I think the products have gotten better, but unfortunately, there's still some structural challenges. So with that, a little bit shorter than the last few weeks. I do try to keep it under 15 minutes, and I succeeded today. Back to my original point, our discussion this week about MSOS. In the technical reversal there was some other stuff going on as well. You might want to read that when it comes out tomorrow. And God knows we could use an end to this downturn since February. Hopefully that's the case. As a reminder, if you want to get our newsletter, you can always go to New Cannabis Ventures and find it on Sunday morning. You can also sign up and have it sent to you via email. So with that, over and out.